We have with us here somebody who's seen it all in the stock markets in that sense. I must say, Ashish and I go back many years. In the mid 90s, when I first met him, Ashish was one of the brightest sparks in the newly set up NSE team under Dr. R.H. Patil. He's still a very bright young person. Only difference is today he is the MD and CEO of the world's third largest stock exchange, the National Stock Exchange. In the interim, Ashish has done a lot of things. He's also been the MD and CEO of the Bombay Stock Exchange. And he's also been the CEO of Mumbai Indians before that. And now, of course, he's heading NSE. So, Ashish, to start off, I'd like to ask you, over your journey as having covered the stock markets, having watched the stock markets as an administrator mostly, what do you think are the 4 or 5 key, milestones in the Indian markets which have really stayed with you? Which are the defining moments of the Indian markets in that sense?
Thanks, Saurav. There have been many moments, but one of the more sort of revealing situations was when I think in July 95, I went to Coimbatore to inaugurate the first NSE terminal outside of Mumbai. And that was like 6 months after we launched NSE in 1994. And I placed the order, and within a second, the confirmation came saying that the trade happened. And there was like a 75-year-old person who was the father of the owner of the brokerage house, and he could not believe it, that he could get the prices at which the people who were sitting in Mumbai could trade. And that was a kind of a beginning of revolution in my mind. I mean, I had set up the technology. It was all Mumbai in some ways. Mumbai was the capital, and suddenly it democratized in one single swoop, just brought the entire country on a single floor. And that was a very large sort of revelation. The other part was that we used to have share certificates. I don't know how many of you have seen share certificates or watched that Sony live sort of serial where Arshad Mehta used to trade in shares, which people do today also. But those days, if you had to convert the shares in your name, you used to get like physical shares. And those shares used to be sent to the registrar for transfer once in a year before the dividends came. And many people started actually printing those certificates at their home. So if you had, it is like a currency note, right? You have 1 crore currency note, suddenly 10% comes in and things go wrong, right? So that's how people started, and Saurav might remember some of his stories on those fake shares and stuff like that. And so we had to set up a depository system. And that is where all the shares today are, which you usually trade, are sitting in like a bank in some account, and you are able to move them effortlessly without sending it to somebody or even worrying about whether the signature will be wrong or the share certificates will be fake and all. And so that was another big moment in India's capital markets life. And then we used to get every day a newer rumors saying this broker has defaulted, that broker has defaulted, and that actually happened. If some of you are old enough and connected to markets, you might remember MS Shoes. The MS Shoes episode was a last such episode in India's markets. I think it happened in 1995. NSE had just started. It happened on BSE, but the brokers used to take, or their customers used to take large positions and could not settle when the time came to settlement, because the trade used to happen for 15 days and then settlements would happen anytime after 30, 40 days of that. And in the meantime, the risk would go up. So after the MS Shoes, we said, how do we stop this from happening? Because every few months, if somebody has to go down and the entire market closes and people have to take losses, then there is no comfort for the people who are investing money. It was more a trader's activity, and somebody losing, actually the entire market loses. So that's where we set up clearing corporations which provide guarantees for settlements. These are things which happen in the background. None of you are aware of why these things happen and what are the philosophies behind it. But in a way, you end up using them. So today, I mean, those days, the best days. So these are the like three momentous occasions. The fourth was, of course, starting of derivatives. That around year 2000, because we wanted to separate the trading in stocks, the spot market from the speculation. So that's where the derivatives were introduced. And so these are like four seminal moments in India's capital markets history. And in terms of technology history, just setting up the satellite telecom network, because India, if you recall in 93, 94, if you had to get a telephone line at home, it would take 5 years. And to keep it running, you had to pay every month to the linesman, right? And so from there, the entire country got on the same platform using satellite. I mean, we used to send satellites upstairs to the sky, but we never used anything out of that. We were just, everyone was doing, we were also doing. And suddenly we started using that first time. And that was like a huge technology moment. After that, computers actually came in life of people. In Coimbatore, in Dibrugarh, in Jorhat, people placed orders on computers and it gave them response, and there were actually trades happening on which money has to be transferred. After that, India's technological prowess got established. That was the first and single largest public digital infrastructure project of India. That was NSE. And then all the IT companies of India came up, Y2K came, and of course the automation of banks came. But they also did their ATMs or their automation of branches on the same VSAT network to begin with. And that's where India's automation, India's IT prowess, India's public digital infrastructure, what you know now, and all those tech billionaires we all worship, actually, in some ways, this was the mother of the technological revolution in addition to the financial markets revolution. My first projection of NSE, because I was a project finance officer in IDBI, which was told to set up. If I had done 10,000 trades a day, 10,000 trades a day after 3 years of starting the NSE, I would have been immensely successful. Because BSE could not trade even 10,000 trades a day in such a large hall, because they used to make mistakes by placing, hand signals, writing against stuff, and they used to trade for 2 hours and actually solve those disputes for next 15, 20 days. And that was the case. And today, just now, market ended at 3:30. We did 13 crore trades. Close to 1,000 crore orders. There is no similar market in the world. When he said we are the third largest, that is equities. But overall, in terms of number of trades, NSE is the largest exchange in the world in terms of number of trades every single day, right? And look at it, in 94, it was even more unusual. When people had not even seen computers in India, this happened. And today also it's unusual that India, being per capita GDP income so low, is able to have such a vibrant market where people are trusting other people to run the businesses in which they become small shareholders. It is a leap of faith that has come when NSE started. The total market capitalization of India was around less than 4 lakh crore. Today, it is 3.2 crore, 80 times. In less than 30 years, 29 years. 30 times market capitalization raise, $3.8 trillion, fourth largest in market cap, third largest in equities, largest in derivatives. There is no similar market in the world. There is no similar country in the world where poor people trust other poor people to run businesses for their profits. It's a phenomenal journey. And whatever you saw before or whatever you will see after would not be possible if you don't have money, right? So even Kautilya, Chanakya wrote 2000 years back that dharmasya moolam artha means even if you have to do religion, you require money. And so today, if you basically get excited by everything else and not about money, probably you are missing the point.
But Ashish, talking about the first initial days of setting up NSE, it was done, NSE was in fact set up as a counter to a closed club after the Harshad Mehta scam in particular of the Bombay Stock Exchange. So how daunting do you think it was to take on these powerful brokers and who are very, very powerful, and the entire capital market is in their grip in that sense? How difficult was it to sort of set up this exchange in the initial days?
No, there are, I think, two aspects to this. One is the societal aspect. When do the reforms happen? When great crises happen. When great crises happen in any society, the time to reform comes. Sometimes the society takes that opportunity to change itself, and sometimes they don't. Like what happened in 2008-9 world financial crisis. It was a great opportunity to reform the financial system, which we didn't as a world, not only India. We were a smaller player. But during Harshad Mehta scam, the entire system came into disrepute. And that was the time when we were also liberalizing. And why I'm giving you this background is that you understand, can such hard-hitting reforms happen today? Unless there are great crises, it's not easy to change the society from kind of, and changing the stock market system this way was very, very daunting. It was like unthinkable, not heard of. Nowhere in the world, the way India did happened, even post facto. After NSE became successful, still all the exchanges in the world were still operated by stockbrokers. Later on, they became corporates and they started selling out, and now even New York Stock Exchange is owned by some individual people like ICE and all. But it did not happen the way in India it happened, that a new company after Harshad Mehta scam, the government decided that if you go and try to reform that group of brokers who are running the exchanges across the country, it may not happen in short time, or it may not happen at all. And that's why they wanted to set up a new exchange, which they told IDBI to do. And that's where NSE was created as a first step for the bond market, because Harshad Mehta scam actually happened under bond markets. And then later on for the equities. And in quick succession, literally, I think May or June, we started the beta trading on debt market. July, Dr. Manmohan Singh came as a finance minister to inaugurate the debt market. And then November 3, 94, Diwali day, we started the equity. So very quick succession, it started. And while we were setting up, the odds were like against us by miles, because people used to say, boss, how will computers work every day? Because computers used to conk off pretty much every hour. PC-80s had just come in the world, not in, personal computers were not heard of before that date, even in the rest of the world, right? So technological, there were issues, but society-wise also, people who had money were brokers. And they were running it to some extent, people say, for their own benefits. But effectively, there was a system there, and that system was feeling threatened. So whoever was trying to set up, and we were all basically lowly paid bankers. And people thought that this is a government promoted exchange. Government cannot run itself. How can it run a stock exchange?
But Ashish, I mean, sorry to interject, cut to the present, and you have the biggest exchange you run, third largest in terms of equities. And then you have these hordes of and technology at the cutting edge right now. And regulator is also pushing new technologies, and we have new instruments also which are coming into the market. And then you have these hordes of new investors, particularly with COVID and after, coming into the market. How do you think these new investors will now be able to take the vagaries? Because the market is never certain, right? No matter how much technology, how much surveillance you put, and you know it best, how does this whole new set of young, enterprising, ambitious Indians come into this market and start understanding that there are downs which will happen? What is your message to them as the NSE CEO?
Basically, we have just now around 8 crore plus investors, unique investors. Those days we had probably few lakh investors. Today, 8 crore. Investors is around 5 crore households, which is 17% of India's population, household population, directly investing into Indian stock market, which is a very large statement. And it has gone up literally 3 times between 2019 or 2020 early and 2023. Literally 3 times in 3 years. No such sort of move happened except in Jandan Aadhaar Mobile, where government forced a large number of accounts to happen. Here, it happened pretty much voluntarily. A lot of people came in, and as you said, there are people wanting to make quick buck because that is the exciting part of markets. That is the, in some ways, hidden situation where people think they will be able to make money, although other people may lose money. So what we try to tell them all is that if you have to trade, then you have to be an expert. What is trading, right? What is investment? Investment is that if you buy a share after study, whether the company or the industry or the economy or the world economy, and buy a share for a company, then stay there for 3, 4, 5 years. Of course, you keep on watching, come out in case it's not working out. But if you have to buy in the morning and sell in the evening and you call yourself investor, then I think you understood the dictionary wrong, right? It's a trading, it's speculation. So we try to tell the people that buying in the morning or selling in the afternoon is for the experts who provide you this kind of liquidity, but you should not be doing that. Similarly, many young investors want to, or young traders want to go into derivatives because that give you much more leverage and they move fast, right?
In fact, that's something I wanted to ask you about. A recent SEBI study has also found that 9 out of 10 people actually lose money in F&O. And here we are talking about extending trading hours also for F&O. So how does that sort of work out?
No, it's again, both are, in a way, you may think it is connected, but basically retail investors should not be participating in derivatives. Now, having said that, the longer hours are for the sake that in case the news happens, because today we trade only 6 hours. The rest of the world started automating after us, but they all run 24 hours. Why? Is because news doesn't happen during the market time only. Some news, some war coming out or some earthquake happening doesn't have to happen between 9:15 and 3:30. It can happen at 8 in the evening or it can happen in 7 in the evening. So when people want to work on a news, they have no choice. Foreigners have a choice because Indian products are traded abroad also. So that's where they are able to hedge their products. But we are trying to tell, or some of us are trying to tell that because I want to be in front of the screen, every time the market opens or market stays open, market cannot go beyond 6 hours, otherwise I will get tired. So that's why you cannot go about 6 hours. So I say if people are losing money in some ways, idea is to take them out from that market. But strategically, which country will allow its most important asset today? $3.8 trillion is 1 out of every 3 rupees Indians consider as wealth. 1/3 of India's wealth is now represented, and if 18 out of 24 hours, the pricing of that asset is done under some other regulator, we are having a strategic problem, boss, right? And that's where, as long as possible, if you have ability for the professional traders, the professional hedgers to actually use that information coming in to take positions, that allows the regulators to control the markets better. And people don't have to be there on the screen every moment because they are not supposed to trade so long for nothing, right?
Talking of news-driven developments and the markets, Ashish, you know, we've recently seen earlier this year and afterwards as well, these huge fluctuations in the Adani pack, for instance, based on some news-driven developments. Now, despite all the technology, despite all the warnings the exchanges introduces, margins and all of that, how do you think this will affect particularly the younger lot which is coming? What is the kind of way out of this to prevent them from these huge swings in the market?
So in a way, the volatility is going to increase across the world because the news flow is happening faster. The actions are happening faster because the technological changes are happening faster. So companies which were very small earlier are becoming large faster. earlier, a company would take, say, 20 years to reach a large scale. But IT companies reach those scales in probably 10, 15 years. And some other companies are now becoming very large in 2 to 3 years, right? So that's where the news flow is going to be also faster. Volatility is going to be here to stay. And India is connected to the world in a much larger way today. If you take India's exports plus imports, which is what tells you the total trade, is now almost more than one third of our total GDP, right? Almost, right? And that is like large connect to the world. So whatever happens in rest of the world will continue to happen here. And so we may think that how much do we trade? We trade a lot now. Although we import, but we export a lot of services, right? So effectively, everything is connected and those things will continue. The volatility will be higher. And that's
does that mean a greater challenge for regulators and exchange authorities like yours, clearly, right?
No, it is. And that's where basically what we try to do is first to save the system by having settlement guarantee fund in the middle so that no such defaults, like I told about MS shoes, happens. And then for individuals, we try to create regulations and other things saying that who can invest in such products or who cannot invest in such products. And of course, we try to also do a lot of investor awareness seminars. Between the two exchanges, we do more than 20,000 investor awareness seminars, and probably it'll increase. But the kind of numbers we deal with is even larger, and so every time you fall short. But using this kind of platforms, we also try to tell all the investors that try to stay longer, try to diversify. If you don't have time to study all these things continuously, go through mutual funds, go through ETFs, so that you get to participate in India's growth. Because if India grows, the companies will make profits which are more. Your share prices will overall increase. Sometimes they go down, but largely over next 40, 50 years, if you think India is going to grow well, then stock markets will give you better returns. And if you don't want to study or don't have time, please go through mutual funds, go through ETFs, go through even portfolio managers or some financial advisors, so that you get the right advice. But please don't trade in derivatives if you are not expert.
We've run out of the time, Ashish. I wanted to ask you two quick questions before we wind up. One is, there's this constant talk about, when NSE itself will list, because you've done this in BSE. BSE is now a listed entity. When would you repeat this feat in NSE, and what's sort of holding you back?
In a way, first to list, you need to have an approval from the regulator. In this case, when any company goes for listing, they have to go through a large main board. They have to go through with their prospectus to the regulator, and that's how it happens. In this case, the NSE's regulator or day-to-day regulator is also the same regulator. And so they have to take a call when they think we have improved enough in our corporate governance so that they are comfortable allowing general public to invest into our shares. And so as and when they approve, after that it's all procedural.
Isn't that a dichotomy? I mean, you are in charge of surveillance of the entire market, and yet you have to convince the regulator that you are still not a stock worth investing from the investor side.
No, in a way, because we are highly regulated, the regulator also, in a way, it's their reputation online, right? So unlike a steel company or a port company or a cement company, here we are a highly licensed activity, right? You don't get a license to run an exchange easily, right? It's a extremely difficult license to get. And today, largely in functional exchanges, there are two stock exchanges, two commodities exchanges. There's one stock exchange which is not that functioning. So effectively, it's not easy to get, and it's a frontline regulator.
But is there a possibility of one nation, one exchange, NSE, for instance?
In a way, if you look at the rest of the world, there are countries like Japan or Australia, which are reasonably large enough, have slowly merged their exchange into one. And there are countries like US, which allow 50 plus trading venues, right? So the argument is on both sides. And for me, it's the same question was on how many airlines a country should have, or how many soap manufacturers you should have. And answer could be that it is only one soap. Ultimately, they are all different colors, right? What is the point? And similarly, airlines is an airline, right? But still, more competition helps you, gives you some diversity, and that's how the US works on. Other side, people want to have conformity and only one kind of entity to regulate. So that's where most regulators prefer a single exchange. And so it depends on which way the country wants to go. We are just employees. We'll continue to do our job.
So that's the well, but as the former CEO of Mumbai Indians, do you have any, what are your thoughts on the World Cup which just began today? We can't help but ask you this question.
No, I think basically India has to worry about playing the left arm seamers in first few overs. If we can handle that, I think we would be okay.
Thank you very much, Ashish, for spending time with us this afternoon. And thank you, ladies and gentlemen.
If you like the video, do like, comment, share and subscribe.